Hello everyone, welcome to Thai stock market outlook and stock pick for the month of August 2015. Let's start with the market wrap up for last month, the month of July first. Actually, last month the set index plunged quite a lot, around 100 points from around 1500 level to its lowest around 1400 before bouncing back around 40 points in the last couple of days before month ends. The plunge caused by a lot of concerns surrounding the markets, both external and internal, like the Greece debt crisis concerns, the Fed rate hike fears, and the China economic slowdown. And the most important factors we think will come from the internal front, like the weaker Thailand's macro pictures. The global economic slowdowns caused Thai exports facing with a negative growth for the 6 months in a row. And also the announcement to postponing of the government's infrastructure investment projects that seems impact the index sentiments quite a lot because a lot of investors hope to see the progress of the government infrastructure project in the second half of the years. The weaker momentums, the more concerns over economic outlooks. For these factors, we think it's not that bad because it's only postponing but not terminating for all the projects. So the short-term impacts may be quite negative to the market sentiments, but in longer terms, we think it's still being a major factors to push the market, to push the economics and also the market sentiments for next year. So investors have to keep a close monitors on the issues. For the month of August, we'll add two more factors to focus. The first one is the Bank of Thailand policy meetings, which due to meet on August the 5th. About the policy interest rates, we think the committees will keep the rate unchanged at 1.5%. They would waiting for the pass-through effects of the previous two consecutive rate cuts in March and April to jumpstart the export, which may be in the third quarters of this year. And another important factors would be the second quarter earnings seasons. As the weak macroeconomic pictures and a downbeat earnings seasons for the banking sectors reinforce fear of a weak earnings seasons for other sectors due to hand in earnings scorecard during the first half of August, following the list of further consensus earning downgrades for this year after the second quarter earnings seasons went down. Of course, not all sectors, but only few selective sectors are expecting for an impressive result. So the risk for the market downside remains. On the issues, this the graph showing the corporate earning downgrade in for 2015 and the patterns of the earning downgrades in the last 5 years of Thai corporates. In the left-hand side chart, show the EPS forecast for Thai corporates. You can see that it have already been revised down for 5.4% since the beginning of years. And the left-hand side chart show the earning downgrade patterns for the last 5 years. In the last 2 years, in 2013 and 2014, the earning downgrade seem getting worse in December estimates. So if this year it repeats with the same pace, it means at least another 5% downgrades to come for the December estimate. So in our view, August is going to be another weak month in as the absence of a strong positive trigger for a strong market rally. This is potential that choppy downside action will likely continue. Key support levels is placed at 1360 or 1400 point, while the upside would be limited to 1450 or 1460 points. So we recommend investors to sell in the rally or sell at around 1450 or 1460 points resistance for short-term investor on the view that the market remain at least or further earning downgrade for Thai corporate after the end of the second quarter earnings season and the fund outflow triggered by a potential September rate hike by the US Federal Reserve. But for the medium to long-term investor, any dip at key support level of 1360 point should be taken as an opportunity to accumulate positions. And our topic for inclusion in our model portfolio in the month of August includes the Airport of Thailand or AOT, BTS Holdings, Kasikorn Bank, and TTW Public Company Limited, which will give you more detail on each stock.
Four stocks we added onto our monthly. The first one is Airport of Thailand or AOT. AOT is a leader of Thailand export airport business operator with main business line are managing, operating, and developing airport. And there are 6 international airports under its responsibility. With improving political climate and lifting of the martial law since 1st of April, the international tourist arrival to Thailand have improved remarkably. In the first 5 months of this year, tourist arrival jumped by 25%, and growth is likely to remain strong in June, helped by low base comparison from the year early period. With such positive data, we expect AOT to report an upbeat third quarter ending June 2015 result. Data show aircraft and passenger movement through airport managed by AOT improved by 25% and 38% year-on-year respectively in the third quarter. Strong aircraft and passenger traffic lead us to project a solid net profit growth of 45% year-on-year for AOT, with profit rising to 3.6 billion. On quarterly total operating revenue up by 21% year-on-year. The uptick in tourist number is likely to continue into the fourth quarter. Data currently show aircraft and passenger traffic continue to increase by 20% and 28% during the period of July 1st to the 11th. The Chinese tourists would continue to be the main engine of growth in tourist arrival. Our target price for AOT based on DCF is at 335 baht a share. Our second stock is BTS Group. This is a leading provider of passenger services in Thailand, focusing on mass transit solution in Bangkok. The company is forecast to report an 8.8% year-on-year drop in its first quarter 2016 earnings, ending in June 2015, with profit from normal operation of 537 million. The drop was a result of weaker revenue from property and VGI run media business. On a net profit basis, we expect to see strong growth boosted by exceptional gain of around 2.9 billion from divestment of 2 subsidiaries. The first one is Eastin Grand Sathorn Hotel and 2 land plots, both sold to U City and Associated Company. The Medium business, meanwhile operated by VGI, is expected to hit bottom already and should be recovering, and we see the loss in modern trade media would gradually be replaced by other new ad medium. The company has recently entered into a contractual partnership with LED Advanced, which holds the right to manage different ad media at 13 airports of AOT and has aggressively expanded into provincial ad market through its 30% owned affiliate Midas. We also expect more aggressive expansion of BTS into property business. This will be conducted through a joint venture with Sansari, with 6 new projects worth 25 billion to be launched this year. 25 new projects worth a combined 100 billion baht are planned for launch over the next 5 years. And U City, a 36% owned by BTS, will develop 2 commercial property projects worth 18 billion. The move should be positive to BTS value. We forecast profit from normal operation to increase by around 10%, but including exceptional gain would boost 2016 net profit ending March 2016 by 63% to 4.8 billion. Dividend return is projected at around 0.67 baht per share, translating to around 6% yield. Our target price for BTS is at 11.2 a share based on sum of the part valuation. The third stock is Kasikorn Bank. This is the third largest commercial bank in terms of asset. We like the stock due to its diversified revenue profile. The bank has the largest share of non-interest income to total revenue of around 56% against sector average at 38%. This will make its revenue less volatile in times of interest rate down cycle and slowing in lending. Meanwhile, the bank has strong interest margin with its focus on high-yield SME loan. Although we believe SME loan carry high risk, the bank well-diversified portfolio of SME loan across industry should help to mitigate risk somewhat. There is room also to attract more new clients going forward, as there remain large number of clients which have no access to financial services. Another positive factor for K-Bank is its well-managed NPL. The bank has lowest NPL among the big banks of around 2.4% versus 2.9% of peers. Even though it focuses largely on high-risk SME loan, coverage ratio is also high at 138% against sector average of 122%. Our target price for K-Bank is at 230 baht per share based on 1.9 times price per book. And the last one is TTW. This is a manufacturer and distributor of tap water to Provincial Water Work Authority in West Bangkok. The company also has investment in CK Power, a power generating company. The stock has relatively stable earnings. We forecast second quarter net profit from normal operation to increase by 4% year-on-year due to benefit from annual inflation-based water tariff increase and lower power bills despite flat tap water sales volume. On net profit basis, the results are expected to fall by 4% due largely to tax reversal item last year, thereby causing net profit to stand high. TTW is a regular dividend payer. We forecast first half dividend at 0.3 baht a share, which is similar to what has been paid last year. This year, in the second half, sales volume are expected to be higher, given that the average sales volume in the second quarter exceed the average level it achieved in the second half of last year. The prospect of further cuts in FT rate on electrical use in line with falling energy costs should also help drive costs lower. Currently, electricity charge account for 25 to 30% of total costs, and we maintain this year net profit at 3.1 billion, with our price target pegged at 13 baht a share based on some of the part valuation. We believe TTW is a good bet in time of market when it's lacking positive catalyst. So this is an end to our monthly presentation. If you have further questions later, you can write to us and ask. Thank you very much for your attention.